You've likely heard many stories in the news about sharply rising inflation in the past several months. Inflation can be a cause for concern as people consider their finances. But inflation can also be very confusing and hard to understand. What is inflation? What causes inflation? What impact will it have on our savings? And perhaps most importantly, what steps should we consider to mitigate its effects? Hello, I'm David Frederick, Director of Client Success and Advice with First Bank Wealth Management. In this video, I will briefly discuss inflation, its sources, its effects, and some basic steps you can take to protect your finances in an economy of rising inflation. In a separate, longer video, I will dive into these topics with more depth and explanation. At its core, inflation is a basic economic concept. Stated simply, inflation is the rise in prices for goods and services over time. The natural implication of rising prices is that during periods of inflation, money is also losing value over time. That is, as time goes by and prices for goods and services rise, without either the quality or quantity of those goods and services increasing, the dollars in your pocket and bank account are losing value. Some inflation is very healthy for an economy. In fact, the Federal Reserve System, which has some ability to control inflation, sets a target for inflation at 2% per year. This means that when the system is working as intended, dollars are losing 2% of their value every year. Problems occur when inflation rises above this target. Currently, inflation in the United States is above 6%, the highest it's been in more than 30 years, and more than 3 times the Federal Reserve's target. More worryingly, some experts think inflation is going to continue to rise in the short and medium terms. So where does inflation come from? Economists have different views on this subject. Perhaps the most widely accepted explanation is the Monetarist Theory. This theory is famously summarized by Milton Friedman when he said, "Inflation is caused by too much money chasing after too few goods." What this means is that inflation occurs when there is relatively more money in the economy and relatively fewer goods and services to buy with that money. When this happens, the money tends to lose value and prices rise. This is a reasonable explanation for today's inflation. The COVID pandemic has disrupted businesses and supply lines. This means that there are relatively fewer goods in stores and relatively fewer people providing services. Also, in the past 18 months, the Federal Reserve's balance sheet, an indicator of the money supply, has more than doubled from $4 trillion to about $10 trillion. Most of the $6 trillion in new balance sheet money has gone to the federal government for multiple large COVID relief bills and other spending bills. Indeed, there's a lot of money in the system right now and rather few things to buy with all of it. Inflation can have a negative impact on personal finances, but there are several steps you can take to mitigate inflation's effects. First, avoid holding a lot of cash. In periods of inflation, cash is actually a toxic asset. It only goes down in value. Put the cash to work with some inflation-protected investments. Second, seek out fixed-rate debts, especially while interest rates are low. Borrowers with fixed interest rates are actually winners in inflationary economies because the money that they use to repay their loans is worth less than the money they initially borrowed in the first place. Now is a great time to refinance a mortgage. Third, invest in inflation-protected assets. The classic asset during inflation is gold, which tends to do well as a store of value. The U.S. Treasury also offers special bonds called Treasury Inflation Protected Securities, or TIPS, that grow in return at the same rate as inflation. Finally, and most importantly, do not panic. Inflation can be a difficult circumstance, but it can be managed with careful planning. I encourage you to reach out to a financial advisor at First Bank Wealth Management who can help you draft a financial plan and find the right investments to reduce the negative impacts of inflation. You can reach me directly at david.frederick@fbol.com. Thank you.